But don't forget that we, had a prior session to this. I think it was about 2 weeks ago where we discussed broadly the concept of support and resistance itself. If for those of you around who remembers that particular session, it was about an hour, 30-minute session where we broke down the concept of support and resistance and how to identify them majorly on the chart. And don't forget that one of the major things we discussed in that particular session, especially relating to support and resistance, is what makes those levels what they are. Remember, we mentioned that the interplay between buyers and sellers is what you see on the chart, right? Don't forget that we talked about price action being a very close, intimate relationship between buyers and sellers in the market. And the chart would always tell a story of which party is in charge, right? Remember that when it comes to trading in the global financial market, it is either you're buying or you're selling any of your favorite pairs in the market. It is either you're looking for a buy or you're looking for a sell. So which means we would always have the presence of buyers and also have the presence of sellers in the market. But at the end of the day, it is also important that we ensure to also understand that when it comes to talking about trading levels in the market, in this case, support and resistance, as the case may be, it is key that you understand that they are reinforced by the presence of buyers and sellers again in the market, which means if you go around drawing any kind of support and resistance, I mean, you just go around the chart, you just begin to draw lines, you just draw lines, and then you just begin to say, oh, so this one is support, oh, this one is resistance, and then you just begin to draw lines. And then after drawing the lines, you just begin to say, I will just buy at support and I would just sell at resistance. Oftentimes than not, you would see that those things don't play out the way you expect it to play out. Have you ever wondered why you also sometimes says, but sir, price got to a support, but it broke it. What happened? Oh, I was waiting for a pullback to a level, it got to the resistance level, but then I entered into my sell, but price also broke that level. And then you're wondering, does it mean that the concept of, support and resistance does not work? Or maybe there's a secret that no one is telling you. You see, it is because you've not gotten to the point of understanding what makes them what they are. I've always told people, especially those who come to physical locations, in Port Harcourt, you see, oftentimes when you draw a line on the chart, it is not the line that you're trading. It is the idea behind the lines that you want to trade. And as common as it is to me nowadays, I would always say it is ideas that we trade in the market. We don't trade the levels, which means even in this discussion of how to trade retracements and breakouts, it is also worth of note that in this scenario as well, you also need to understand the idea behind trading retracements and breakouts. Now listen to this. For every instrument in the market that you want to trade, you owe it to yourself to find out what you want to do with that asset. Are you looking to buy or are you looking to sell? That should always be the starting point. Wait, don't worry. The reason why that is the starting point is not because of any other thing, but because that would help you or influence the kind of levels you're going to be looking for, and also the level of confidence that you might have surrounding those levels. Don't worry, with time, we're still going to progress to some certain levels, but let us start it this way. What am I talking about? It means if I pick up an asset, for example, we're currently looking at AUD USD. It means if we pick up AUD USD, rather than just drawing levels of support and resistance and then just saying, let us buy from support or let us sell from resistance, it wouldn't start that way. It would start from the proper understanding of what I want to do. Don't forget, last week, we talked about a few things. One of them being the fact that we talked about support levels being reinforced by the fact that buyers are more than sellers. Don't forget, I think 2 weeks ago, we discussed this, that what makes support, actually support, is one thing, the presence of the fact that demand is more than the supply of that asset you want to trade, and also because you would also find more buyers than sellers on that particular level. And what makes resistance what they are as well is also the fact that here sellers then become more than buyers. Now you now see why it is very, very important for you to always start your trading from knowing what you want to do on that asset. You know why? Because when you mark out a chart, your chart would always provide you evidences of buying and evidences of selling. That's the truth. If you're conversant with marking charts, when you finish marking up a chart, you will see some things telling you about, okay, now is the time to buy, or this is where you can buy from. And there would also be, patterns or levels that are also telling you, okay, maybe now can be the time to sell. But the truth is, if you don't know who is in control of the chart currently and what you're supposed to be doing on the chart, you will just be trading levels blindly. And it wouldn't help you so much to be trading levels. You still have to combine your understanding of what moves the market with this concept of, retracements and breakouts in the market. You see, I am going to discuss this particular topic in 2 different directions. Number one, simple view and broader view. Yes. So we're going to be discussing this concept under 2 different umbrellas. The simple view of trading retracements in the market and the broader view of trading retracements in the market. You're in to get some special information in the session today. Just take your time and listen. We're going to do some simple simulations, but at the same time show you how they look like on the chart. Now, what do we mean by simple view retracements and breakout? What do we mean by, if you're looking at retracements and breakouts in this particular scenario, what does it mean? Before we even go into the simple view, aspect of retracements and breakout, let us, for the sake of people who might not have seen or listened to anything relating to trading before, especially levels like this, what do we mean by retracements and what do we mean by breakouts? Now, a very simple way you can understand this is just follow this simple analogy that I'm going to use for you on the screen. Imagine if an asset is moving in a particular direction, and this happens, so which means something like this. You just stay. Which means you can see something like this. Oftentimes we get carried away with the current movement of prices. And that's why most people will say, I saw the market buying and I entered into a buy. It did not work. So I entered, I closed my trade in loss. Oftentimes it's because when price gets to some strategic levels, which is what we call support and resistance, right? Because if there's a level that is a support, where buyers are more than sellers, it means sellers are not expected to operate in that territory, right? One. If there is a level that is called a resistance, it also means that if sellers are more than buyers in that particular place, it means buyers also should not operate at those territories, which means if there is a level like this in the market, which in this case, I want to be a resistance. Now, resistance in this case, the major job of a resistance is to alter the direction of price. Now, the resistance is going to alter the direction of price. The length or how long it is going to take is not in the hands of the resistance itself. Listen to this. I hope you're getting what I'm saying. that resistance is going to alter the direction of price, does not specify how long, neither does it specify how far it is going to get to. Because oftentimes, when retracements begin to take its course, sometimes something like this can happen. And then price resumes its direction, continues to go up, right? Or sometimes price can also find resistance on some levels, and this is going to happen. But it is the same resistance. But it is the same resistance. So the resistance that took price lower a little bit like this, and price still returned up, and the resistance that took price down this way, what do you think is the difference between both resistance? And how do you spot the resistance that can only alter direction of price for a short period of time, and the one that can alter price over a long period of time? The truth is this: you never know. No lines can offer you that. The only thing that can offer you that is the analysis in the market, which means if there is information in the market suggesting that the direction of the asset you're trading is about to be downside, if you find a resistance in that scenario, the resistance has a very good chance of sending price lower. You know why? Because now resistance is going to be working in hand with the analysis in the market. But there are also some other scenarios where price will run into resistance, but overall direction of price remains upside. The only problem is markets cannot move on a straight line, which means instead of a buy to go in a single direction, it would not happen. Price needs to oscillate. Now, that oscillation in price, that temporal move away from the original direction of price is what we call a retracement. And it can either be up or down. So this movement here is what we call a retracement, a temporal movement away from the original direction of price, which means there is an original direction, which means if there is now an opposite direction away from there, and as long as the analysis in the market is still suggesting either an upside or a downside, it remains a retracement. So in this case, retracement means something like this. In an uptrend, or something like this in a downtrend. This particular movement here is what we call retracement. Temporal movement away from the original direction of price. It is reinforced by the concept of support and resistance, because as a buyer, all right, in an uptrend, a buyer will not operate at resistance. A buyer can only operate at support. So it is natural for us as buyers to wait for price to move back a little bit lower until it finds a level of support for us to get back into price again. Or in the case of a downtrend, sellers also don't operate around support territories. What they do is allow a retracement back to a level of resistance, in this scenario, for price to head lower. So this is what it means when we talk about retracement, especially for those who don't understand what we're talking about. Now, when we talk about breakouts, the difference between retracement and breakout is this. Breakout means in situations where prices don't respect levels when you expect them to. For example, you can find price rising towards a resistance and you are expecting a temporal movement away from price. Listen to this: because levels don't control the market, which means if there is enough liquidity in the market for price to move in that particular direction, which can be reinforced by a breaking news, a new headline in the market. It could be a data release. Imagine during days of CPI, NFPs, and then you are now marking out a level of resistance, and then the news hits the market. And then you are expecting that, okay, if it gets to this level of resistance, so nothing can happen, it will not pass. No, something can always happen. Because if there is enough liquidity in the market, and there's enough surprise in the market, prices can always go beyond levels of resistance and support. That is what it means to have a breakout. That is scenarios where prices are able to go beyond those levels of support and resistance. Now, how do you then trade those scenarios? You know, in a situation where something like this is what you were expecting. So now imagine you were expecting a scenario where price hits this resistance and it come back to a level of support for you to buy, but instead price gets to this level of resistance, and instead of it retracing, it decides to go above it. That is what it means to say, oh, there's been a breakout. Price has now moved above this level of support or resistance. Now, how do you trade these levels of retracements and breakout? So back to the simple view and the broader view of the market. Now, when I mean by simple view of the market, when trading breakouts and retracements is this. Imagine if you're trading sentiment, right? Which means you're trading the movement of prices over a short period of time. Don't forget, yesterday I was speaking to those who came for the advanced class. Sentiment is not something that you can hold on to for a couple of days, except if it remains the same for a couple of days. Oftentimes than not, sentiment can always swing in favor of the market today and against a particular market tomorrow, which means if I'm trading short-term movement of price, it might mean that if I'm going to be trading, retracements or breakouts in that particular respect, I might not need to do too much. I might just need the simple aspect of support and resistance to do this. Now, for example, if you look at my chart on the screen, I mapped out some levels already. One, I mean, if you're looking at what we have, we don't want to overcomplicate things for you too. So we're not drawing support and resistance. We're not teaching how to draw it. We've done that already. We've had a session about support and resistance already, right? So this is not a session of how to draw support and resistance. This is now, trading retracements and breakouts in the market. Now, if you look at these three levels, right? One thing you can see is in recent period, it looks like something like a downtrend is forming. For example, this level of resistance here, and then you can also find that price found support around this territory 2 times, but eventually there's been a breakout. So if you follow this one, let's start from here. So price moves to a level of support, finds a mid-level of resistance here that I don't want to draw, but there's a mid-level of resistance here. But eventually, price was able to break. Now, listen to this. This happened. Something happened in this territory here. And this territory, or what happened here, is what we call a breakout. So here, you have something called a breakout. That is, price was able to go beyond an established level of support. It's been support twice, but eventually price was able to go beyond it. Now listen to this. Oftentimes, when there is a breakout, 2 things are going to happen. It is either a support turns to resistance, or a resistance turned support is formed. It is either a support turned resistance is formed, or a resistance turned support is formed, which means If price breaks a support, what follows is usually after that breakout, that support level is expected to act as the next level of resistance. For those people who know about higher lows, higher highs, this is something that contributes to that particular knowledge, but not to overcomplicate things for you. When a support level is broken, oftentimes price would always turn that same level back to a resistance. And if you see what happened, which is why the strategy of trading breakout is built on this. It is called break and retest for a reason. Now, a lot of people are of the opinion that it is not every time that price breaks a level that it would always retest it. Let me tell you something, maybe later, even if price refuses to test a level at the time you want it to test it, you just don't forget that one day, not far away from you, it is coming to that level. Why? Because oftentimes, price wants to continue a pattern. And if a level that is support has been broken, it is natural for price to use that same level as continuation. You know why? Because for trends to be created, previous highs must become the next lows. What that means is this. For trends in the market, either uptrend or downtrend to be created, something like this must happen. So if you look at this, it means for successful trends to be created, like this, you can clearly see, oh, this is a trend. It means previous highs here must become the next lows. The previous highs must become the next lows, which means before a previous high can become the next low, a breakout must have taken place. Something around here must have happened. So every time before price can make a previous high become the next low, a breakout must have happened, which means a previous level of resistance must have turned support if it's an uptrend. If it is a downtrend, a previous level of support must have turned resistance. And that is why we believe that if there is going to be a breakout, naturally price should offer a retest if that is now the direction that price wants to go. Don't forget, we are still linking this back to information in the market, which means if I have an opinion that downside is the way to go now on AUD USD and price is able to break a support, I'm expecting a retest. And that means a move like this must take place. And you can see that all price did was to use a previous level that used to be support, but the fact that it has now been broken, that previous level became a resistance that pushed price lower. And you can see the way it looks like is like this. Look at it. If I draw this out, it looks like this. From a resistance to a support back to a resistance, then the resistance took price beyond this level of support here, and eventually, price came back to retest that same level before going down. So if you look at what has formed here, it is basically price maintaining that order. Previous highs becomes the next lows, or previous lows become the next highs for price to continue its direction. So oftentimes, when it comes to trading breakouts, we trade it in form of a breakout and a retest. See, I'm talking about a simple view now, which means our attention is placed on one portion of the screen. You can see that I have not moved to any time frame and on 1 hour time frame. Simple view. We're going somewhere. So we are still looking at, the 1 hour time frame, a simple view of the market, trading current situations of, AUD USD. Now, if you look at what you have here, this was simply a situation where, now a previous level of support has now become the next level of resistance. Now, listen to this. Look at where price is now. Price is currently trading on a support level from as far back as, I think, somewhere around there. I don't want to increase my time frame. So let's say from somewhere around 14th of May. Now, if the direction of AUD USD still remains downside, which means from your analysis, not just the chart now, right? Don't forget, we're not losing the plot. If from your analysis, everything is still pointing to downside on AUD USD, it means this current upside that you're seeing on AUD USD does not mean that we want to buy AUD USD. It can be classified now as a retracement away from the original direction of price. And that means if prices are going to retrace, if I want to sell and price is reacting off a level of support, I'm looking for the next resistance that I can sell it from. If I find the next level of resistance, I'm going to enjoy myself. Now listen to this. Listen to this. We're going somewhere. Now imagine. This is price. Currently up from a support. And then you're thinking, so now that price is retracing, where will I say it will retrace to before it continues its original direction? Let me tell you something. There's no Gandhi in the market. In case you don't know, there is no Gandhi in the market. That means you cannot 100% say this is where price is going to retrace to and stop. You know why I'm saying this? Let me show you something. Because when you look at this chart, it looks like the next level of resistance that you have is up here. But when you open your eyes very well, that's why I said simple view, support and resistance for trading retracements and breakout. If you look at this very well, there's another mid-level of resistance somewhere around here. It's just a mid-level, just somewhere around here. It's a level that used to be support before, that we can now count to be a resistance. Now, I want to delete plenty lines. I don't like my chart looking clouded. I need you to see what I'm talking about. Now, if you look at this, okay? If you look at this, right? Now you have two levels here, a previous level of resistance that became support, that is also support here, but now turned resistance. And then there is still another one above you. And then you're wondering, so which one are we now going to say the market is going to use? The truth is there's no certainty. But you know one thing that there's confirmations, which means because we're not trading levels, we have to confirm the levels. So if price is currently trading around this resistance, and I'm still of the opinion that from the analysis in the market, I'm still expected to be looking for downsides on AUD USD. Number one, the first point of level that I'm looking for will be this. This is your first contact first. It's the closest one to you before this one above. Now, the truth is, it is either price respects this and it continues to go, or it decides to go as high as this one and it continues to move lower. That's just the honest truth. Let me just say it to you. It's the honest truth. Either one of them can take place. But we wait for confirmations. We wait for confirmations of those levels. That's why if you also think about FIB, one of these days, I think in June, we're going to be taking you through FIB. But those who already have opinions about FIB, when FIB draws retracement levels for you, it does not draw one. You know why? There is no tool in this, I've not seen it yet, that will tell you that this is the only level that price can get you and you must continue going. Listen, there are multiple ones. So we never can tell this is the only one that price is going to use. FIB even draws as much as 23, 38, 50, 61, almost 4 different levels that price can retrace to. So which means if you have two, no problem. It's just that wait for confirmations from those levels before you decide to join the market. And that means when price is currently testing your levels in the market like this, off this retracement, and you're looking for downside, another reason is this. By 3 p.m. today, there is UOM consumer sentiment, which means on AUD USD, if there is going to be positive report for the US dollar, it means further downside on AUD USD cannot be ruled out, which is why we are concerned about this resistance, which means if we're thinking, oh, there could still be positive report for, USD today from the UA consumer sentiment data, I'm looking for downside. So if I'm going to confirm my level, you are looking for every element of price action. It is price actions that we use to confirm levels in the market. And price action is not just one thing, which means it is not just a reversal candle. If you find a reversal candle, fine, there's no problem, but it could be anything. For example, price can start struggling. So things like this can happen. If I find something like this, on a level that I want to use, not a red candle now, I think I need a green for now. So imagine if price was testing this level and it forms a full-bodied candle like this. And then you see this and you say, I will still sell from this level. Then it's a problem because you're failing to see that if price is still forming a full-bodied candle for you, even at close on a particular level, there's a very high chance they are breaking that level. Which means you need things like this. You need to see things like this. And wicks. In fact, it is even better if you see empty candles. If you find a doji somewhere around here, oh my God. Or maybe price starts struggling or a range starts forming around that level. But anything that can just potentially show that they are struggling at this place. Because what struggle does is to show you now that there is buyers and sellers stepping into the market at that particular point in time. But do you know the thing that you have above other people? You know who is going to win. And who is going to win is based on the information in the market, which means if my analysis is saying that there's further downside on AUD USD, it means that sign of torso for me is welcomed. Because I know that that means that buyers or sellers are now stepping into the picture. And eventually they will win because if analysis is suggesting a downside, price will continue to move lower. So we don't see a level of retracement as a God level. That means if we don't find signs of struggles or price actions on a level, it might mean that they are going for the other one. It might not mean that the market wants to change its direction, except something else in form of information in the market is suggesting that. Which means if a level like this is broken in the market, it does not necessarily mean that you should go and start buying. Honestly, if direction is still a downside, this can happen. And then price resumes its downside. But you have already bought, and you have already bought around the resistance, and then price continues to go down. You will then call HFM's name. You say it is HFM that caused it. No, it's because you have taken a level in the market as a God level. It is not a God level. Price can always break a level and use the next one, oftentimes. And also, trading the simple view support and resistance in form of retracement and breakout, you could also think in the line of trend lines. Listen, trend lines also offers you means of also trading, retracements and breakouts, which means it is not only traditional ones like this one. For example, earlier on when I was preparing for the class, I saw something like this and it brought on my attention to that. Let me just quickly clean this. Now, what do I mean by situations where you can find, also levels of retracement, potential levels that prices can also retrace to in form of trend lines? For example, I think one of these days we're still going to talk more about trend lines, but just briefly, what we mean by trend lines is situations like this, where prices, finds avenue to also do something like this, right? Now, if you look at this, it means that an uptrend is being created, but majorly the original direction of price is upside, and that is happening from support levels like this. Now, it means levels like this, or all of these movements back towards the support level, could be seen as retracements, no matter how big they are. It could be that the market is just retracing back to another level of support for you to get another push higher. Now, this could happen in form of an uptrend, or it could also happen in form of a downtrend. So it does not matter. If it was a downtrend as well, it's something like this, for example, happens. So I can clean this one so that I can show the downtrend. So you could see something like this, right? a downside, you know, price retraces back up, then moves lower again, retraces, move lower. Oftentimes, you see people thinking they can quantify a level of retracement. Maybe retracement must only be a small time movement. No, no. When I get to the broader view retracement, even a 500 pip fall in price might be a retracement. Yes, we'll get there in just a bit. You don't quantify retracement by space. You don't quantify retracement by, it must not pass this. Why would you say it must not pass this? Traders would always limit the market to a simple, you see it as just a roadside something. So you begin to time your market, you begin to measure your market. So something like this, as I was preparing, you know, I saw something on AUD USD and I felt like, oh, this could be, you know, this could happen. And if you look at what I have on my screen, look here. So see something. Now, first rule of trend lines is you must make sure you don't force them. When you draw a trend line and you have to force it, is already wrong. So oftentimes, you can always do try and error. If it works, fine. If it does not work, you don't have to force it. So for example, imagine we had something like this, right? So we have something like this, which in this case is just a recent downtrend that is currently forming on AUD USD. If you get the picture, it is something like this, like the one we drew earlier, right? One, then an upside, right? Then a downside, right? Another upside, isn't it? And then a downside back to another level of support. So if you look at that, it means this level here has constantly been serving as a level of, you know, resistance for price to move lower. Which means if you remember that this level is a level of resistance, right? That we expect that price can potentially continue its movement lower after this particular retracement in the market, which means this can happen. But the truth now is, you can see that the other trend line at the top is in conference with the other resistance we marked at the top, which means the market can decide not to use this and favor something like this for further downside. But then you will say that because price was able to break this level of resistance here, it means what they taught you is wrong. Or HFM did not teach you well. Or maybe HFM decided that the market must go against you. Oftentimes, that will never be the case. You need to understand that when we say retracement, we don't say you just get to one place and it will go. Multiple levels can offer you retracements in the market. Find them. It is whichever one the market decides to use after confirmation that you follow. So we don't say blindly jump into one. Even if it is going to be in the case of a breakout, you must also avoid jumping aimlessly into breakouts, because what if it's a false break? So if you jump into a breakout as well, the problem is it could be a false break. What do we mean by a false break? For those who don't know, I think we talked about that last week or so, 2 weeks ago during the support and resistance class as well. Imagine if there was a downside on price, something like this, and then instead of this level of support to help price rise, then we see something like this. And then you think that means you can sell, and not long after, this happens. This is what we mean by a false break. And that's why it's the strategy of trading breakouts is not breakouts and then enter. It is breakouts and retest, which means we must ensure that the level that is broken is not a fluke. And that means something like this is what we're looking for. No matter how long it's going to take price, we're looking for something like this, such that this level that was broken does not give way again for the second time. If that happens, we can look for, you know, continuation in price. And honestly, that's how trends are formed. So there is a simple view, you know, levels of trading retracements and breakouts. And then there is the broader view too. Now, the broader view is when you're not focusing on one aspect of your screen. Because oftentimes, there could be a downtrend on a chart, but overall, the market is still an uptrend. For example, if you look at charts like this, I purposely opened it. Look at copper's chart. Look at this downside. Oh my God. And then you're thinking, wow, Maybe it is time to look for continuation in the downside in the market. But remember what we said. Those of you know, because I would always repeat this. We trade ideas in the market. We don't trade levels. You must not forget that. Even when you're trading retracements, you're trading breakouts beyond the level, don't forget that it is the idea behind the trade that you're taking. You are not trading the level itself, which means if I buy an asset, I'm not buying it because it's a support. No, I am buying it because I have formulated an idea about that particular market based on the availability of information in the market. Now, there is the broader view of looking at some assets, which is why oftentimes than not, if you're not conversant with some assets already, if you take a look at an asset first time and you don't already know about it, you can get carried away with some small time move. Now on AUD USD, the reason why I focused on the current downtrend is because that is what is currently in line. Now listen to this. It is because the majors are like that. But there are some assets that you don't treat like that. For example, this copper is not an asset that you'd see as just, look at a market like this. Look at this. Oh my God. Look at a market that has been rising consistently since February, rising consistently since February. And then look at it. And then suddenly there's a downside. And then you think that downside now is the current direction of price. That's what we are trying to say. We have now moved to the broader view. So the simple view can be you trading maybe within a day, you're trading a chart, current price movement. But there is also another angle to it. It could be the broader view of the market, which means the downside you're looking at on your M30 time frame, H1, which is making it look like maybe there's a crazy sell on the asset. A single change in time frame to H4 on higher time frame could give you a better overview to see that even this move lower on price is ordinarily a retracement in price. I remember an headline that I saw on, what's it called, on Forex Live yesterday. I wish I can bring that up. I think I showed those who came to the advanced class yesterday. It clearly says commodities extends retracement, which means the headline was not even saying commodities are falling. There's a difference in saying commodities are falling and saying commodities are extending retracement. Even on the Telegram channel, for those who follow the Telegram channel, it is the same language we used yesterday. Let me quickly look at that if I can find it. But there was something we said about that yesterday, talking about how commodities are extending retracements, which means because we know from the broader overview, it is actually not downside. Look at this kind of movement. And then this is happening. This is what it means when we are talking about retracements in the broader overview, which means mostly on higher time frames, majorly from H4 for me. It helps you see the market in a different light. And oftentimes, when you're looking at broader overviews in the market, the level of retracement that you should be looking for also, this is for people who are ready to listen, can be influenced by, something. Let me show you something. There's something we call psychological levels. If you have the round numbers, you can use it. But psychological levels are levels where you just naturally think, I think this is where price is coming to. For example, look at this level when price was rising. Please stay with me. Look at this level when price was rising. It found resistance here. Right? Price was rising. It got here, it found resistance. Again, price finds another way to pull up again. And then it also got to another level, or this same level self, I think is within the same environment. Yes, clearly within the same range. Yes, so it's a connecting factor like that. So now look at that. Price gets to this same level here, finds a level of retracement, but eventually there was a breakout. Now listen to this. Price has stretched its upside. Remember that the reason why there is an overstretched upsides on copper is because buyers are actively in the market. There's analysis suggesting the presence of further upside on what's it called, copper. But the truth is, a lot of people who are also interested in buying it are not interested in buying it at the top. You know now, the law of gravity now, you don't buy something when it's already too high. So naturally, other people who are interested in buying this thing are thinking about, we need retracement back lower. Now, when price is here and retracement had not started, if you ask me where I think retracement is going to get to, I will tell you honest truth at that instant that it is coming back here. Let me tell you why. It's a psychological picture. This is a level of resistance. This is a level of resistance, right? What happened here is a breakout. And don't forget, following every breakout, what must happen? A retest. Which means for me, the reason why I've just said, I think price might be coming back to this level is because I understand the rule of price action. I understand the way price moves. I know that if you break a significant level like this one, no matter how far you are able to go above it, you're coming back. I remember a trade position I had on USD CHF. I think that picture is even still on my LinkedIn channel. It was a level that USD CHF had broken for a long time, but it was a crazy level of resistance and price did not come back. But I was patiently waiting for the day it was coming back there. Why? Because under normal circumstances like that, when price in an uptrend breaks significant levels like that, it is natural for you to expect a movement back to that place. You just don't know when. But eventually, when it is coming, you should be thinking it is most likely going to get here. But the truth is, now what do you trade in this instance? Do you trade continuation in downside? Or do you look for further upside on copper? Don't forget what we said earlier. You are trading ideas. You are not trading levels. Don't forget. You're not trading levels. Which means if overall analysis in the market is still suggesting the presence of upsides on copper, it means that on this support level, if price, and look at what price is offering you. Oh my God. See what price is offering you. Do you know what this is? This is price action. Price is already struggling on the level. Listen, price is struggling on the level. Oftentimes, struggles like that are confirmations of price actions. If price begins to struggle on levels like that in the market, it is offering you insight that they are not willing to go through or pass this level yet, which means upside is on the card. Now, listen to this. Upside is on the card does not also mean I'm going to fly into it. Listen, you must also check your outside surrounding. That's why SWOT analysis is talking about internal and external environment, which means if I'm looking at the internal environment of this chart, yes, there's a support level that I've been waiting for. Yes, there is price action in form of struggles, but don't also forget it is Friday. It is the end of the week, which means you don't want to get carried away with the fact that yes, there's struggles, there is, confirmation of levels there. Oftentimes, because it is Friday, anything can happen, which means those who have come from the peak resistance there up to this point can still be looking for further downside for profit-taking levels towards the beginning of a fresh week. Which means for me, all I'm going to do is watch how this market behaves until the end of today. Then, by Sunday night, when market opens, if I can confirm that that level is not breached, I'm getting in. Why? Because the idea in the market is still suggesting the presence of upside. And listen to this, the truth is markets like this are, places where FIB would always find their beauty. But because we already have a session plan for FIB ready for you coming up, don't worry, that one will dissect how FIB could also help you with retracement. But look at this now. It means this level that you're also looking at on the chart is also a retracement. But look at how big or how sizable it is. It's a retracement, but very sizable. So we don't time retracements. We don't measure it by space. We don't count it by candles and say, you're already forming so many or plenty candles, so can no longer be retracement. Who told you? Who told you? Who told you that? This is the broad overview of looking at retracement. For those of you who are interested in the JPY pairs, if you're interested in JPY pairs, oftentimes the days where JPY decides to come back to life, maybe off a risk off in the market, or maybe even from the Bank of Japan's Governor Ueda's speech on Monday, it means if I look at a JPY pair now, for example, look at how stretched it is. If I'm looking for retracement on a broader spectrum on this particular asset, honestly, you know what I'm thinking about. I'm thinking about something back here. It's a more significant level for me. I feel like this was a level, very significant price level that price needs to get back to in the market. If price offers me something back into this territory, I feel like it could be something good for me to chase in the market, which means this needs to happen before further upsides. That's what it means to trade retracement. So when it is going down, you don't say, it is already selling. That means sellers are now in the picture. No, yes, it is going to sell. But that sale is going to be for a short period of time because it is going to be a temporal change in direction. See this. See this. One, down, up. So what do you think is going to follow? Do you think he will just be going like this into the roof? That's a problem you have with traders of nowadays. Price has even laid a foundation for you. It is showing you what it's doing. I've gone up. I came down. I've gone up again. Naturally, because pound still remains in a better spot compared to the JPY, right? For those of you who are following recently, following the UK CPI released on Wednesday, inflation coming 2.3 versus 2.1%, and a lot of banks have revised their expectation for the Bank of England. Nobody is seeing a cut in rate for the Bank of England in June again. Almost everyone is talking about starting from August. And also this morning, there's an headline suggesting that the June meeting for the Bank of England might not hold because every statement activity of the central bank in UK has been paused ahead of the July 4 elections in the UK, which means pounds is currently in a better spot compared to the JPY. But the truth is, irrespective, you still cannot buy pounds JPY at a resistance level. But you can then make some inferences, expositions about level that you think, okay, if it is able to retrace itself back here, when you talk about price action, you're talking about price repeating something it has done before. Maybe you've not found out. Price action is the study of the past in order to present or to predict the present and the future, which means it is you looking at what price has done before and hoping that there is a repetition of that same activity. So if I'm seeing price here and I'm expecting a movement lower before I can get in again, I'm not doing anything wrong because price did the same. Price did the same. So if I expect this to happen, I'm not in the wrong. I'm not in the wrong. And I know there's no way we close the session without talking about gold. Everybody wants to talk about gold. But the truth is also, gold movement in recent times, if you look at this downside from a smaller time frame, you think gold has sold all his life. But the truth is, the broader spectrum of the asset is still suggesting the presence of upsides. Look at it now. It's almost as if, look at where it came from February this year. It's so high, which means move like this to the downside cannot be seen as the broader overview. And that means that particular downside on the asset is still seen as a level of retracement for price. All you should think about is gold still supported in the market? If yes, you want to buy. If you're going to buy, what level is support level? And if you look at this, you can find multiple levels here. This is a very significant level here for one. This was a level that price broke, eventually gave us a retest before moving higher in the market, eventually came back again, moved higher. It was broken for a while, but also you can see that after this happened, Price still came back to test this region before going up, which means this happening also means that if there is still going to be support for gold, I'm expecting further upside. But not today. Don't forget, once again, it is Friday. You're no longer considering just inner environment, also externals. And don't forget also there is consumer sentiment for, the USD by 3 p.m. And that means if there is going to be a good report there, there's a possibility that we can extend further downsides on gold, which means the support around this territory might come into picture. It does not change the fact that the broad overview of the assets remains upside. I hope you are picking something. That even if consumer sentiment is released and price is able to break this level, as long as you believe that the information in the market or the analysis in the market is still providing support for gold, it means even if it breaches this level and I'm still interested in buying, I'm waiting for it at the next level around this region. Because if one level gives way, you wait for the next one. You don't cry. You don't say, that means what they taught you is wrong. Hey, no, now. If one does not work, wait for the next one. Go and queue at the next one. And that's why we don't jump into our trades with emotion. Please don't forget, on Thursday's classes is always trading strategies and risk management class. There we also talk about the psychology of trading, which means when you're looking at the level that you're looking to trade, it is not enough that price gets there. It is only enough when the candle has closed and you have confirmed your elements of price action, so that you avoid jumping into trades at levels that you have not confirmed. Some of you have been jumping into support without confirming it. You've been jumping into resistance without confirming it. I hope that from today you would understand that you are not trading levels, you're trading ideas. We trade ideas in the market, not levels. Levels are only expected to be a means to the end. That's what they are meant to be for you. And you don't put all your hope on a level. You don't. There's no tool in the market that can cause you to put all your hopes on a level. If one level is broken, another one comes into play. Just always remember that if you're trading retracements and one level that you were hoping that price respect is broken, just go ahead to the market, find out that analysis you are looking to trade or that idea you're looking to trade remains valid, find a new level that you're going to use. It is key. It is particularly key to what you're doing. So don't forget, there are ways you can trade your retracements and breakout from simple view. That is, if you're trading short-term price movement, but at the same time, if you're concerned about the broader view as well, you can also look at that from the higher time frame. It also offers you a broader, understanding of how the market explains or works, especially for those who are looking to, swing the trade for a period of time. Even if you're intraday trading and you're the type who likes to hold on to your trade for like 2-3 days like me, you could also be looking at something like this for, your moves in the market. I wish I can show you, that headline on Forex Live that clearly talked about the fact that commodities are currently just having retracements despite the increase in downside on the asset. If you looked at gold yesterday and on, I think Wednesday, you'd be thinking, they're selling. Eventually, yes, there was downside, which means sellers who have been starved for a period of time stepped into the market. They took what we call near-term control. That's something you also have to understand. One of these days, we are going to have a webinar where we are going to discuss with you the disparity between buyers and sellers in the market and how buyers and sellers decide how to take control of a chart, which is why we use words like near-term control, short-term control of assets, and long-term control of assets in the market. That interrelationship is something that you might eventually also need to get comfortable with. Ladies and gentlemen, it is important that some of the things that we've talked about today continue to resonate with you. You have to make sure you hold on to these things. You have to hold on to some of these things. Please help yourself. Please help yourself. It is key. It is key And on that note, we're closing the session today, but now you can please put in your questions into the question and answer box. I'm going to read all of them. I'm going to explain them and answer them. All right, but we're done teaching.